Let's talk about a deadly mistake that traders make that almost always kill their chances of becoming profitable. And if you're a new trader, pay close attention because you might not know you're actually making these mistakes. Now, what if I were to ask you the currencies you trade? Did you answer this question confidently, or was your answer like this?
As for me, I trade a lot of currencies. I trade GBP last week. Next week I'm gonna be trading US 30. I'm gonna be trading NASDAQ. Like, I have a lot of currencies. I swap them on the road. Like, I don't care about the currency. Wherever the moves out, that's how I'm doing.
Now, having no focus is just like walking a long distance with no destination, which will eventually get you tired and stranded. Now, for the first part, I'll definitely recommend you actually go out and try a bunch of different currency pairs and try to select at least from 2 to 4 currency pairs that you're good with. Now, having a good currency pair actually depends on you, where you live, and having a good schedule. Now, let me explain what I mean. Now, the 4 major currencies are the United States dollars, the British pounds, the Australian dollar, and Japanese yen. Now, when these currencies are actually the most volatile is when they actually have their sessions going on. Now, in case you don't know this session, let me give you guys a quick rundown. Now, there's the London session, the Sydney session, the Tokyo session, and the New York session. Now, if you did listen carefully, you can actually notice that these are actually places of different countries. Now, these different sessions actually have different time they actually occur. Now, since I don't know where you're watching from, you can actually find out the time when this session actually begin when you go on Google and just type in Forex session in your country. Now, once you've already found out the time for this session in your country, you can go ahead and select the currency. Now, it's either that you actually have the London or the New York session during the daytime and then have the Sydney and the Tokyo session within the nighttime, or opposites the case. But actually, in my own case, I actually have New York and the London session within the daytime. Now, the biggest currency pairs, the best currency pairs to trade is the US dollar, the British pounds, and euro. And the US dollar, the British pounds, and euro actually occur during the London and the New York session. Now, if you actually have the Asian session during your daytime, I'm not trying to say you should not sleep at all. No, I'm not saying that. But you can actually find good pairs that actually move very well within the Asian session. Now, the currencies that actually move well within the Asian session is actually the Australian dollar, the New Zealand dollar, and the Japanese yen. Now, it's actually best to look for currencies that are paired within these 3 currencies like I mentioned. Try to pair them with pounds or US dollar, like GBP AD, USD JPY, AED USD, NZD USD. Now, once you actually put these currencies together and trade them within the Asian session, you find out that this is not actually a loose session. Now, once you've already found out like the pairs that you can work with, I'll actually suggest you take about 4 pairs. Now, why I talk about having 4 pairs within your code section is so that you can easily master these currencies and easily know when you see a setup like this on GJ, you know that it's about to take a buy, or when you see a setup like this on EU, you know that it's about to take a sell. You don't actually get yourself confused and minimize all those distractions and everything. Now, once you've already figured out the currencies you'll be trading, there's one next step that is very important, which is definitely your analysis. Okay, so now there are actually 2 major types of analysis, which is technical analysis and fundamental analysis. Now, technical analysis is the act of using like indicators or tools to actually know the direction of the market, and including price action to know the direction of the market. While fundamental analysis is the act of using like the market news to know the direction of the market. Like if the president actually has a speech, it also affects the currency. The economic activities in the country also affect the currency, and obviously it's actually show on the chart. Now, I know there are some people that doesn't use price action, that doesn't use indicator, that just come into the charts, and whenever they see the market going up, they just go ahead and place a buy, and whenever they see the market going down, they just place a sell. Now, this is not trading. I'll tell you, this is not trading. Once you start to get into the market, you know how the market will start teaching you your lesson gradually, that this is not a place where you just come and second guess. Now, if you're someone that's currently doing that, please just stop and learn a strategy and use that in the market. Now, if you don't know anything about technical analysis, you can actually just check through my channel, because I've already covered those topics, giving you guys a strategy, an entry plan, an exit plan, and how you can actually hold and manage your trades and everything. Now, in technical analysis, there are actually 2 parts to it, which is using indicators and using price action. Now, using price action is knowing price movements. Now, the market go up, the market come down, there's a retracement. You actually study those phases and how the market moves. From there, you can actually use it to know the direction of the market. And there's another part which is actually called the indicator style trading. Now, the indicator part of trading is having an indicator that actually calculate the market. Now these indicators don't magically tell you the direction of the market. Now what these indicators actually do is that they actually collect data from the market and use it to tell the direction of the market. Like let me say for example the 20 moving average. What the 20 moving average does is that it counts from 20 candlesticks and try to draw like a directional movement of where the market is going. You put in like 200 moving averages. What it will do is that it will calculate like 200 candles that have moved and use it to draw like a pattern to which the market move. And that's how indicators actually work. If you were to ask me, should I use price action or should I use indicators? These indicators belongs to the market and they calculate data from the market. Whereas you come into the market and trying to study like price movement, the retracement phase, the push phase, although that point of learning is actually very, very important. In short, it should be like the first thing someone should learn. But as you advance your journey, I actually recommend you to try out different indicators, most especially the moving average, because it gives a very good directional bias of where the market is going. Now in terms of fundamental analysis, this is actually coming from the news side of the market. Now if you actually take your time to look at the charts, some point you see that the market actually spikes up a lot and you see that the market actually comes down. Now one thing about news is that it's very, very general and broad. Now the news can talk about like a hurricane, a news can talk about financial aspects, a news can talk about sports. Obviously sports doesn't affect the market, but now one thing about it is that your local news will not give you everyday all time about the market, because obviously they have other things to talk about. Trying to spout the time when they see something about the forex market will actually be it might be hard to actually find that out. Now for you to actually get news related to the forex market, now what you have to do is that you have to go to your browser and type in www.forexfactory.com.
Now once you've typed that, you can actually go ahead and tap into it. Now right here, this actually gives you every news related to the market. Now how this works is that there's actually high impact news and low impact news in the market. Now whenever you see these yellow files, it's trying to represent a low impact news in the market, and when you see an orange file, it's trying to represent a medium impact news. And yeah, it also gives you the time when it's actually happening. Now what this red cases actually represent is a bunch of high impact news. Now when this high impact news is on, the market tends to go crazy.
Now another thing very important is risk management. Now for every businesses, there's actually a risk applied to it. Now in forex, you can actually control that risk. Now if you want to go ahead and risk 50% within a day, like you can actually do that. If you want to risk 100% within a day, is very, very much possible. Now one thing you shouldn't do is to go crazy in those risk management. Now I know some people might not understand this word about like risk management and every other thing, but let me put it in a way that is very, very like relatable, which is lot sizes. Don't use high lot sizes. One other thing you also have to consider is like the currency or the pair you're trading or the commodity you're trading. Now if you place like 0.01 on GBP USD, it's not the same thing when you place 0.01 on gold. Go on TradingView, actually look for this ruler tool right here. I'm just going to put like a picture of it, so you can actually tap on that ruler tool and draw like a space in the market. It's actually give you this pip in the market. Now this is something that you can actually do whenever you want to trade in new currencies. Now this is exactly why I say you have to actually stick to a certain amount of currency. Now you know your account size and you actually have an instinct of when that lot size is very high. You have to actually control that. Don't make anything make you to place high lot sizes. But anyway, if you're actually into like trading in percentage, this is an app that can actually help you do that. I've already covered that in like about 2 videos or so, so if you want to check about that, check it in that video. Now another thing very important is actually trading plan. Now let's use this for example. Let's say someone wants to actually go ahead and build a house and the person does not actually contact the architect. Well, what do you think will happen? Confusion, misdirection, and every of those things. Now your trading plan is just like your architecture of how you grow in this market. For you to actually have a trading plan, you don't need to carry a pen and a paper and start writing it down. Come on, we're in 2022. Your trading plan should be in your head, or even if you want to actually write down your trading plan, it should be on your phone. I know why, because most of the time you're with your phone. You're with your phone almost all of the time. When someone calls you, you're with your phone to answer the call. Whenever you want to send a text message, you're with your phone. Most of the thing right now, we are actually with our phone most of the time. If you want to go ahead and write it down, I'll actually recommend to use Google Keeps, because I find that app very useful. Like I use it to write some journals and every other thing that, okay, if it's something that I might forget, I just put it on Google Keeps. So this is just like my personal my personal recommendation, I'll say. So if you want to put down your trading plan. Now at this point my audio did get bad, so if you guys enjoyed the video, make sure you drop a like, hit the red subscribe button if you're not a part of the family, and with that being said, I'll see you guys in the next one.